is indeed a structural shift from property investment among all those overall FAI towards more new infrastructure under overall infrastructure. So if you look at the property investment side, 2023 was still a declining year, and we expect the decline to be narrowing into 2024, but still declining. But what will be growing, as we mentioned previously, is the overall infrastructure FAI growth of about 5%. But 5% is not a very exciting number. Within this 5%, what might be encouraging is obviously what we call new, or what the government calls the new infrastructure. Right now, new infrastructure is still small within the overall infrastructure, representing about 5% of the total infrastructure spending. But this is actually growing very fast. If we break down the new infrastructure, the government actually breaks down into three categories. First is the information-related new infrastructure, that is essentially 5G data centers. If you look at first half 2023, year-on-year growth was 13% year-on-year. And the second category is the integrated new infrastructure, meaning combining AI, internet, and all these advanced technology with the traditional industries. The very good examples are both automobile-related, whether being the EV charging or whether being the smart roads facilitating autonomous driving. And with this integrated new infrastructure, growth was more than 30%, 30%, for the first half 2023. And the last is innovative new infrastructure, and that is more related with science, technology, R&D, and that is also growing fast. So indeed, we are expecting that new infrastructure will deliver high growth and will contribute more towards the overall FAI.
And Robin, it's Jeff. Would that act also as a policy fulcrum for the China economy to really see that structural shift to be more consumer-driven growth, particularly, as you said, those three areas of e-commerce, more innovative science and technology solutions in terms of potentially consumer-facing industries, as well as, of course, the automation? Is this finally the game changer that could really give a boost to that ultimate restructuring that we need to see in China, with the consumer sector driving more of that GDP growth in lieu of the property market, as Tanvir had mentioned?
Yeah, indeed. You're absolutely right. As if you look at the infrastructure FAI number between 2018 and 2021, that growth was very small. And that already reflects back then the government has an intention to shift the economy growth more towards consumption-driven. Having said that, we then have the COVID and things didn't go well. So it's refocusing back to the infrastructure, traditional infrastructure spending over the past few years. But going forward, especially with the new infrastructure, with China having such a big population, and consumption growth up until now has been still weak, partly related with the property-driven, because people are having more concerns with their wealth effect, whether from the properties that they hold or the potential future incomes. So that is indeed having a negative drag for the consumptions. So moving forward with new infrastructure, with, like as we said, the EV charging power, the autonomous driving related smart infrastructure, this kind of new infrastructure development will indeed promote more consumption-related activities, and also will help logistic cost savings to boost economy growth.
Do you also see monetary policy moving in tandem, Robin? We had the injection of medium-term loan facility basically change expectations for the loan prime rate cuts next year. How do you see monetary policy, if it is at all playing a role in the new infrastructure development?
Okay, indeed, I mean, we need actually more financial support for these new infrastructure or overall infrastructure spending as a whole, because right now the key challenge for these spending is where does the funding come from? We've got the local government having more funding difficulties, and they are highly geared. And that is why we are indeed looking for the special purpose local government bonds to be the quota to be actually slightly higher compared to last year in 2024 to reach about 4 trillion. But the incremental is small. We did actually see the government actually coming through with this 1 trillion special central government bond to support more hydraulic related projects. So we are indeed seeing this more fiscal supporting policies more at the market levels in order to support these infrastructure funding, because at the end of the day, this new infrastructure initially does not generate very good returns. It takes time for longer term returns. So that is why we need some initial help from the government early on.